Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor, online at SteveSaretsky.com. Steve, we're talking federal budget. Is the new budget likely to affect the real estate markets in the Lower Mainland and the rest of British Columbia?
Yeah, so we're going to have to wait to see how the sort of fine details come out, but preliminarily we have sort of a pretty good idea. So I'll try to break this down and try to keep it relatively brief. But yeah, long story short is what they brought in was essentially shared ownership structure for first-time buyers that are under 20% down payment. So basically what they'll do is if you're buying a resale property, they will basically lend you essentially up to 5%. So that 5% will actually be used to reduce your mortgage payments. It won't go towards your down payment, but it'll effectively reduce your mortgage payment. So let's say you buy a house for $400,000. You put down 5%, which would be $20,000. CMHC will then put down another 5% effectively. So that will reduce your actual mortgage to $360,000. And they're going to do the exact same thing for new homes, so to basically boost the construction sector. But they'll do up to 10% as a payment towards that, not 5% for the resale market. So basically what it's doing is that it effectively is lowering the payment for first-time buyers. Unfortunately for the first-time buyers, this loan is basically considered a loan. We're going to have to see how they structure it, but it will actually have to be repaid once you go to resell some point down the road. So, I don't really know if it's going to give much of a boost to the market, particularly for the Vancouver condo market. I mean, the fine print actually shows that you can't have more than a maximum household income of $120,000. If you have over that, you don't qualify for the program. And then you can only borrow or leverage that up to 4 times your income. So basically, long story short is the max purchase that you could basically buy under this program would be about $600,000. Well, I can tell you, even in the city of Vancouver, there's very little product that is under $600,000. So it really doesn't help that many people. It might help people out in, say, the suburbs out in Fraser Valley. It might help people across parts of Canada that are more affordable, maybe, Alberta, maybe Ottawa, Montreal, that sort of thing. That might help some of those buyers get into the market. So maybe that stimulates a little bit of the entry condo market, so to speak. But I think, long story short, is I think that this is more of a boost to new condo developers that are, struggling to sell pre-sale units. This might give them a bit of a boost now that buyers are basically at 10%. Their mortgage payment's lowered by 10% essentially, or 10% of the payment. So, yeah, that's what I think. I don't know how much of a boost it's really going to provide. I don't think it'll provide much. The federal policy, the federal mandate from all sorts of policymakers has been to curb home price growth and curb household indebtedness. So obviously starting to give away free cash is not really the vision that I think that they're trying to do, but the government wants to make it look, it's an election year, they want to make it look like they're doing something. So let's kind of put in a policy that kind of looks good, kind of looks like we're going to help first-time buyers, but it really doesn't really help them that much. If you really want to help first-time buyers, you kind of just probably it's just better to let the home prices come down as they currently are than trying to keep the prices inflated, in my opinion. So that's kind of what I think.
Well, when Christy Clark gave the $37,000 grant, all it did was boost house prices by $37,000. Is this just going to boost house prices by 5 to 10%?
Yeah, exactly. So, I mean, that's how I kind of look at it, is you're just kind of basically, it just gives people more ammunition to boost the prices up, because people are effectively buying a payment. So if you're going to stimulate that low end of the market, which even in Vancouver is not really that soft, it's softer, but there's still quite a bit of demand at that entry level. But you're actually helping the seller more than you're helping the buyer, because the seller is probably going to put more money in his pocket after you bid the prices up. So, but again, I don't know how much that's actually going to stimulate the low end of the condo market. Sales at 10-year low, prices down 10%. Seems to me like we're kind of at the end of this credit cycle. So is this little bit of a boost going to help? Really, really hard to say at this point.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's the latest on national home sales?
We had February, so this is honestly good timing for the federal budget, but you had February home sales across the nation came at a 10-year low, so it was the worst February that we've had for home sales since 2009. And then you also have the home price index, which is basically a lagging indicator. The national home price index on a year-over-year basis dipped into negative territory. It only dropped 0.1%, so very minimal, but it was still the first negative reading on a year-over-year basis in since 2009, in a decade. So good timing, obviously, for the federal government to basically come out and provide a little bit of stimulus, a little bit of juice to the market to try to get things going again.
As sales slow, what's happening to national home prices?
Yeah, as we sort of just discussed, that you're seeing the average price is more the leading indicator, so I think that was down 3 or 4% on a year-over-year basis. And then the home price index obviously dipping into negative territory. So pretty much there's downwards pressure across the majority of the Canadian real estate market, other than Ottawa and Montreal, are still sort of the two outlying pockets that are signaling decent growth and some decent strength there. But yeah, I mean, Alberta is really, really soft. Vancouver obviously is very soft. And Toronto, 10-year low in sales, with prices decelerating, is also quite soft.
What's the latest on home sales in the Lower Mainland and BC?
BC, I believe it was the fewest sales in a decade. I would have to double check on that, but Vancouver specifically, we had the worst February since 1985. So that's quite ominous. So obviously, the industry here was hoping for a little bit more of a juice from the federal government in terms of the budget. I know, speaking with some mortgage brokers and whatnot, a little bit of disappointment in that aspect, hoping for some more stimulus. But again, probably if you're a buyer, probably a good thing if the government doesn't provide too much stimulus if you want prices to come down. So yeah, pretty segregated.
Are the banks concerned that this real estate downturn could get legs to the downside?
Yeah, I think the banks are obviously more cautious, at least the guys that I talk to that are moving, copious amounts of money over there. They are a little bit more cautious, particularly in the construction financing sector, trying to really vet the developer and putting in a lot more stringent clauses to make sure that they hit pre-sale requirements, targets, that sort of thing. And the same sort of thing on the home buyer side, is you're seeing a few more deals here and there collapse, but I would say relatively speaking, it's still relatively easy to get financing, but things have definitely tightened over the last couple of years, and that's generally what we expect to see when home prices are coming down, is the banks get tighter, not looser. So which ultimately kind of feeds into usually further decline.
We'll have more with Steve Saretsky right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are high-end mortgages becoming tougher to get, and is it an indicator of what's ahead for house prices?
Yeah, the high-end market, when we're talking about sort of the Vancouver housing correction, that is where it all stems. It stems in the high end, particularly, in West Vancouver, luxury homes, where there was a significant amount of foreign capital that came in and boosted those home prices in 2015, 2016. Right now, those houses are down probably 35 to 40% from their peak valuation. So because of that, there's really no liquidity at this point, where even private lenders that I speak to are very hesitant to actually issue a loan in that area. So it's like, even hypothetically, if you wanted to go in there and buy a house, it's really difficult to actually get a loan. So you almost have to be very well capitalized, with a hefty down payment. Because again, even in that market, if you have a 35% down payment, well, we've already seen the prices come off 35% in the last 18 months. So if you're viewing that as a lender's perspective, their job is to basically maintain their capital. They don't want to lose money on a loan. So they're looking at that and saying, well, if I lend you money, what is my exit strategy to get my money? How do I get my money back? So even as a private lender, if they're issuing you, say, a 12-month loan based on your equity position in that property, well, in 1 year time, if they want their money out, are you going to be able to sell that property? Are you going to be able to sell that house? So that's the big question for a lot of lenders right now in that high-end market, where there's very few sales and prices are coming down quite a bit. So yeah, that's something to keep an eye on. I think that's why that's really starting to depress that luxury market.
Any sign foreign buyers are coming back with the lower prices, and despite the foreign buyers tax?
Yeah, so there was a good article that was basically, it wasn't a good article, but it was circulating around the internet and had a lot of questions on it, basically proclaiming that there was some sort of bottom-feeding frenzy of foreign buyers coming in and snatching up discounts in the West Vancouver luxury housing market. But that really isn't showing up at all in the data. We're still off to the slowest sales in West Vancouver that we've likely seen in a long, long time. So the foreign bid is dried up, and that, I think, has less to do with the taxes the BC government brought in. I think it has more to do with the Chinese capital controls that they brought in. It's very difficult to get money out of China, whether you're trying to move it into Vancouver or you're trying to move it into, New York real estate, or you're trying to move it into Australian real estate. All those markets are reporting significant pullbacks in Chinese capital flows, and that's impacting particularly the luxury housing market. So, in terms of Chinese buying, I simply don't see it at this point. Maybe, money somehow finds a way to get out down the road, but at this point, the capital controls seem to be pretty stringent at this point.
What's happening to the psychology of home buyers and sellers as more negative data is released in the mainstream media?
There still seems to be, I think, some resistance from sellers. I think the spring market is going to be very interesting because when I talk to a lot of sellers and realtors that are working with their selling clients, is everybody's hoping for the spring market to provide the boost that they need. It's like, I'm going to sell my house, or I'm going to sell my condo. It's going to be this spring. This is my chance. Let's try to price it. Let's try to get the top dollar that we can get. And let's move this thing. So they're a little bit less receptive to say, that really low ball offer to come in, because everybody's thinking the spring market is when things typically sell, so my house will sell. So what's going to happen is, I can tell you already, we're off to a very slow March, and the way housing markets work, you're going to have a slow April, you're going to have a slow May. So what's going to happen is you're going to have people that were banking on the spring market to sell their home. It didn't get sold. It's now June or July. What is your game plan to get the house sold? So in my opinion, it's likely going to have to be further price reduction. So the spring market, it'll be interesting to see once that subsides, who's still left trying to sell.
Now that it seems interest rate hikes are on hold, are people waiting for rates to actually come down and maybe get a better bargain on a mortgage?
I haven't really had any clients that are trying or waiting for rates to come down. They've come down pretty marginally. You've seen the Canada 5-year bond, which is typically tied to 5-year mortgage costs. That 5-year bond has been just plunging. I think it's down 80 or 90 basis points since peaking at the end of 2018. And the banks have really only given you back about 20 basis points in terms of borrowing costs. So you have mortgages basically go from 3.6 to 3.4, that sort of range. Not really enough to propel a whole bunch of people in. I do think the likely scenario is further drop in yields, and the Bank of Canada, given how weak economic data has been, I think there's more of a likelihood that the Bank of Canada's next move is a rate cut, not a rate hike, which is, I think, is still going contrary to what the majority of people think, which is the majority of people think that rates are still going to go up.
Steve, anything else you wanted to add about this budget and perhaps people's hopes of getting into a home?
No, I just think that I think it's sort of typical politics. It's kind of window dressing, like make it look like you're doing something, but really on the surface, you're not really doing a whole lot. It might boost, again, the lower end of the market a little bit. I can't see it really helping Toronto and Vancouver, just because the prices are already so high that this program is kind of ineffective at those levels. So it might move the entry level condo in some segments, in other parts. It might help the developers out a little bit, but it's so marginal given that housing has already started to turn, and banks are pretty hesitant to actually issue new loans, and people are hesitant to take on new debt, that I can't really see it making a much of an impact on the market. And I think that's really ultimately, I think, what the policymakers want, because their whole desire over the last 18 months has been through the stress test, and reducing CMHC exposure has been basically to curtail household indebtedness and to curtail real estate prices. So I think the government wanted to come out and make it look like they're trying to help first-time buyers, but it's really, I don't think, going to do that much to the housing market.
More smoke and mirrors than something concrete.
That's right, always.
Steve, thank you so much for chatting with us.
Thanks again, Jim. I appreciate it.
My guest has been Steve Saretsky. You can find him online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.